You guys back in or what? Oh, man. No. It should be good. It should be good. Let me know if I'm in. And I'm asking YouTube. I got Discord in line. We're chilling here with Discord. What about YouTube? Let me know. There it is. I got the playback. I got the playback going. I got the playback going. Oh, fuck yeah, it works. Fuck them for trying to keep me down.
Man, we got 64.
Oh, that's the round 2, man. Let's go. As you come in, throw those A's in the chat, boys. Spam that shit. Let's go, man. We're gonna bring this shit way back around, man. Come back in. Fuck yeah, people are pouring back in again, man. Let's go, let's go, let's go, let's go. They ain't keeping us down, man. They ain't keeping us down today, boy. What is up, team? What is up? Let's go, man. Let's go. Getting some technical issues, bro. All we gotta do is reboot, man. All we gotta do is reboot and we're back in. Damn, dude. All right, man. We're seeing all the people come right back in, bro. Let's go. Oh, man. Let's go, bro. There we go, man. There we go. We're really seeing the people come back in now, man. I'm really happy that you guys are coming back in. Guys, I'm sorry about that, man. This was ridiculous, man. We got shorted to the damn ground. But we're back. We're back. What's up, Victor? Jason, what is up, dude? Great, man. Ian Tucker, my bro, helping me out over there, man. Peter Joy, what is up? What you mean, what's this, bro? This is going to be the live stream, man. This is going to be the live stream. We're going to find out the targets for tomorrow. Big ass market prep here. We're going to be taking a look at, again, AMC GME. We're going to look at FNGR, NVDA, Tesla, SPY. We got things to look at, man. We got work to do. We got money to make. It must have been the phone update, Big Jim. Damn. Should have never done that phone update. Let's keep it coming, team. What is up, everybody? Mark Roach, my bro. Stuart, what is up, dude? Good to see you here. Victor, what is good? Steve Cole, my brother. Good to see you in the chat. We're letting this thing fill up, bro. Let's bring in the family again, man. Let's bring everybody back in and let's get this thing rolling, right? Ian Tucker is asking me about GTII. Fuck, how can I say no to that? How can I say no to my bro? We're not saying no to my bro for nothing, bro. We're going to take a look at that too. We're going to take a look at GTII too, bro. Everything, man. We're going to go over it. Let's go. Nina, what is good with you? And how's my girl Nadine, man? How's everything out there? The options are turning into straight ass. Stupid Bitcoin, my bro. Adrian, good to see you there. Great, man. What is up? I love it, team. I love it, man. I love it. We're pouring way back in. Let's go. Batter, good to see you in there too. What's up? What's up? Everything good, man. Everything good. I love it. I love it, guys. Yeah, we're just going to let this thing fill up real quick. We're going to get this thing rolling. Paul, my bro. I love you, dude. Thank you so much for that dono. Saying, Arca, I can't thank you. And the Arca team, I can't thank you for, and the Arca team for, and all y'all have done for me. Dude, come on, man. Your Discord is legit. I appreciate you so much, my brother. I hope to continue bringing things to you, man. Bringing good stuff to you, right? You know what? I actually I shared an interesting image the other day, man, with the team. I don't think I have it saved in here anymore, but I can't share it anymore. It's all good. Because somebody just put the Chicago Bulls up there, man. I have a cap. I had this demo with an Arca logo next to the Arca Bulls cap, right? It was a snapback. Nina, she doing good? That's good to hear. That's good to hear. Making sure she's going to school, making sure she's getting that education, making sure she's getting that good food, right? Future, what is up, man? What is up? Good to see everybody in here, man. I love it. I absolutely love it, man. We're going to pop this thing off in just about a minute here. We're just allowing that chat to come back in. Guys, there were literally over 150 people right when I started, and this thing just completely shorted me. Fuck them. We're good, man. We got the voice going. We got the voice going now, though, bro. You guys can hear me now. We're good. What's up, Creative Finance? Good to see you here. Yes, absolutely. You know what? I do. Somebody mentioned that to me, and I think it may have been you just a little bit earlier, right, about the 8K. And I will say that I don't know if Noel Pinkney is here, right? But that's a person inside of Twitter X, and they brought to my attention. They did bring to my attention the GME 8K, right? Dropped just yesterday, and it was going to be a little difficult to see here, right? But let's see. Let me see if I could do this in a different way. You know what? If you have the link, share it with me, right? But this is it right here, and I am sure that what people were looking for out of this 8K, I'm sure that what people were looking for were actually the proposal, the election of directors, right? So I know it must not look the best right now, right? But yes, the election of the directors here, of course, didn't show Keith Gill. I know that's where people were. I know people were looking for that right away, bro, when that 8K came out. I mean, I was. I don't know if you were, right? We're just speculating here, man. But I didn't see it there, and I'm like, well, you know, it's all good. There's probably a plan behind it. Wealthy, thank you so much, man, bro. Let me go ahead and see if I can pull up. Yeah, let me see if I can pull up that link right now. Sorry about that, guys. Here we go. Let me come back to the chart. You have a second link, right? Okay. There we go. Thank you, brother. Check this out, you guys. Here it is. This is the Form 8K GameStop Corp. And yeah, so what I was just saying is that I think that everybody was kind of looking for this section to be updated with a certain name, right? Thank you, Wealthy. Really appreciate you, bro. And of course, we didn't get the name that we were looking for, but it's all good. It's all good, right? I understand, guys. What matters here is the balance, though, bro. The balance that's happening, that's critical. This guy was able to dilute, man. This guy was able to dilute or even pull out cash from the shareholders, right? But yet the asset didn't make, it didn't, retrace all the way. Remember, we were sitting at around 985. Was it 4 or 5, 6 weeks ago? Around April 14th, right around when we started talking about this. So he maintained, it's still above $20. It's still above $20. It's sitting at $24.53. So that, if anything, guys, that's more of what I'm impressed about, right? Is that he was able to do this huge dilution or pull out the cash here, bring in $4.1 billion in cash to the company. I think that they are debt free, so don't quote me, right? I think they're debt free now, and we were able to still maintain. Game Banger, my bro, thank you so much for that dono, dude. Really appreciate you. I don't know what I'd do without you guys, man. I love you guys so much. But yeah, he was able to bring in some cash for the company. I think they're debt free entirely. And now we're still holding above 20 bucks. Now, Blessed is asking me, did you watch a Richard Newton's YT video this morning? If so, your take. No, I haven't seen it. In fact, somebody just posted for me to watch earlier today. What I was doing is actually, I wanted to come in to trade live, right? We were going to trade Bitcoin live. In fact, if we have time, we may still be able to do that. But I want to go over the place for tomorrow too. Because yesterday is typically Grandma Day, right? But we didn't go yesterday. I wanted to make sure that we can put together a market prep too. But yeah, no, I haven't seen it just yet. And what about you? Let me know what you guys think about Richard Newton's new video. What was it on? Because I know the last segment was a 4-part video that he released on the meaning of or his interpretations of the reversed segments, the posts, right? And I know that there have been a few people out there that have found some interesting takes on it, and some of which are correlating pretty nicely with price action and how they're executing their, for example, the shareholders meeting and their buy and sell orders. I think it. I can't wrap my mind around it. It's because I'm not studying it that much. Chiquita saying how you, bro. Let's grab some bags. That's it, man. We're going to grab the bags and run them all the way to the top. Right? So, if you guys saw that Richard Newton video, let me know right away what you think. Because to be honest, I didn't see it, guys, and I will check it out later. Well, I'm going to try to do I'm going to take my little boy to grandma's house tonight. We're going to do a market prep privately in the Discord later on, even still. But yeah, so here's another thing that I wanted to show you guys. For those of you that didn't catch the live stream last night, I have an interesting take for you. Right? You know, I'm always trying to bring the fresh approach to you, right? I'm always trying to be creative with the way that we observe the markets. And usually when price action drops, when price action goes against the bull's favor, even if you're a bear, if it goes against your favor too, the engagement and participation in the stock become lesser and lesser, right? It tends to drop. So I have a chart here that I want to show you so that you can be aware over how psychology works against price action too, especially when it's coupled. So look at this. What you're observing here is my viewership chart from YouTube, right? And this is GME's daily chart. They're both starting from a similar area right around here in the earlier part of June. And check out the chart. So what I'm saying here is that usually I'm streaming to about, I would say anywhere between, on average, 600 to around 1,500 people. That's the average now, because it did grow. My max amount has been around 1,900, right? So as the price action declines, viewership also declines. The attention also declines. This is not the only one that I have for you to watch. This is AMC. Check out AMC's decline against my viewership on YouTube. I just took the screenshot yesterday, right? When I was showing you guys the sensitive information, right? How much I make on YouTube or whatever, all that stuff. So it's really interesting for us to pair the charts coming out of viewership from YouTube against the price action coming out of GME and AMC. So, yeah, right, Blessed is saying, so if you get more viewers, then GME goes up? No, I'm actually the sympathy play here, right? I'm actually, I'm third. So it would be GME, AMC, then Arca Bulls. That's right, man. Guys, make sure to like that. Make sure to like that. Finesse that button, right? Like that button. It definitely helps with the algorithm. It definitely helps with us bringing in some more peeps so that we can just show and deliver good information, right? So that we can all be aware of how to trade the financial markets. So guys, yeah, it's interesting the correlation between the viewership. So what I'm trying to say is that for those of you who are watching now, right, it's going to be usually around 120, 30 to about 250 people when price action drops. We compress, right? We compress down to a low. But that's okay, right? That's okay. That usually happens. But it's usually those that are still around when there is fear that end up buying the better opportunities, right? As Warren Buffett says, right? You literally buy the fear. You sell the greed, right? For those of you that are in right now, for those of you that are still observing at the lows when price action is dropping down to a scary level, I know that you're serious about your investments. I know that you're serious about your trading. I know that you want to take things to the next level, so that's why I'm here speaking to you. Despite the fact that we'll get a lower viewership, we're all good, right? So that's that correlation. Now, let's go ahead and take a look at price action here for GME just to remind everybody what we talked about last night, and we'll be good to go, right? We have just a little bit of a different setup now because of what happened, getting shorted with all the sound, right? I'll pull it up for you guys. Okay, regarding price action, we already got the majority of the pullback that we were looking for from the 4-day close. But now we have a 5-day close, so we have to look at what happened there. Okay, so let's take a look at the 5-day candle and see what's up. Well, man, look at that. The 5-day candle landed on a big red. And remember what we usually talk about, right? When there's a major closure like this, there's usually a retracement. So in this case, yeah, we're sitting at 2470 post-market. This is traditional close, right? The pullback here would be upward. Just by practice, right? So that's going to give us a little bit of a range because we do have a wick right over here that is consistent with that pullback, right? This wick right in here. That's showing us about 2667 to 2634, but this becomes an area too. The space between this body and this body here also become a space for us to evaluate. So let's mark it down. And it is slightly different. The analysis that we're providing right now is slightly different from last night because I'm going to bring to you more ideas, right? I'm not just going to repeat the same ideas one day to the next. Yes, I'm going to touch on what I spoke about the last day, but remember, I tell you all the time, I'm going to try to bring a nice fresh approach every day I look at this because there's infinite variability within price action. We could do that, right? So we're going to mark off that 50% area as well. I will say this little tool here to bring up the price action is one of the hardest tools for me to nail a straight line on. But it's all good. All right. So these are some of the upside targets that I'm observing. Of course, we definitely have to pay attention to the 50% retrace of the prior 5-day bar. We're about to open up. We are opening up the new one, right? So, oh shit. Actually, guys, the target is way higher. Sorry about that. I'm feeling over here like it's Saturday, but it's not Saturday. It was fucking Wednesday, right? We have a weird day off. So here you go. That's your prior day. That's your prior days. And this is the bar that we're trading on right now. So yeah, look at this. We're coming right back into this area here. If it is that the psychology treats it the way that I just said, then the upside targets could start happening. But we also need the broader markets to push alongside with GME. I understand that GME had deviated away from the broader markets in the shorter time frame, but if the markets go up, then the markets assist everything coming up as well. Remember that the drop here that we experienced was a lot due to sentiment. The sentiment was the reason that price action ended up decreasing to this level, right? Because of what happened in the shareholders meeting, whatever else, right? It was a big panic. And I do think that usually these types of things are an exaggeration. Like we were talking about yesterday, we pulled up the manipulation chart, right? And we identified a massive amount of manipulation signals starting from, I think it was in the 5-minute time frame, all the way down to the tiny intervals, right? This was all the last traded day. I forgot how many iterations we had, but I think it was above 10, right? I think it was literally above 10. Stuart, Thank you so much for your donut, my brother. You want to get that fib in there? We're going to put the fibs in there as well. All right. So I'm just trying to say, right, that it's only in those types of moments that you would get the price to, or you would take advantage of the price short, right? It's only in those types of moments, guys. So if we start facing a continuation to the upside, I will say this, that these would be the prices to return to. We have a little bit of resistance coming up right in this candle high here. We have another resistance coming up at this top side of 25.21 here as well. Okay, I'm giving you the larger level so that you know if price action starts running to the upside, then you are likely to face some pressures at these levels. Keep an eye on them, okay? I'm giving you the receipts here so that you know what happens. Okay. I have another idea for you, but this requires AMC. And this also requires, it requires a perspective that somebody asked me yesterday. Somebody asked me, I think it was actually his username was Price Action Research, right? He came up and asked me, brother, do you think that if AMC is showing strength, then will AMC go up and pressure GME towards the upside? Well, I denied that. I denied the fact that AMC will pressure the price action on GME. Why? It's simple, right? Because of market dynamics. In my perspective, GME is a large cap. It's not flying in the bounds of the IWM, which is your Russell 2000 small cap index. It's not running in the bounds of that. It's running more alongside the broader markets. Remember, it had a negative narrative, right? So that price action sold off. So of course it's not going to follow the markets at that point. But now that catalyst is out of the way, now that the shareholders meeting is done and we know that Keith Gill's name is not there, then price action could start to revert, right? It was an initial exaggeration, and then you come back, right? And I have an idea for you. I think it's embedded in AMC. Now, AMC is on a bullish setup. There are times where a small cap or something within the index that doesn't have a high weight to the index, it could be serving as a potential hint. So while I did deny the fact that AMC would drag GME, I'm not going to deny that AMC may be giving us a hint over what could happen to the price action in GME. So it's not to influence GME, it's to give us a hint into what may happen. So it's speculation. Remember what I'm saying here. It is complete speculation that AMC is showing a potential upside. We're very close or at a floor in a bullish setup. This floor being one of them. The floor is not random. The floor is within the golden pocket of the Fibonacci ratio. We're within the 0.618 fib and the 0.382 sitting perfectly on the 0.5. So that marks off an area where price action can spring from. And we've seen this and we've done it and we've performed it here in this channel, right? Over and over and over the last weeks and weeks. So you guys know how it behaves. You guys know how price action behaves when it reaches these zones, right? So we're well within it right now in a bullish setup. When I drew this wedge, I spoke of a potential breakout starting here. Maybe Thursday at around 8 a.m. Pacific, 11 a.m. Eastern. So if that's really going to happen, I don't expect these numbers to come in first. What I really would expect is for price action to reject off of these highs here, right in here. In other words, price action would run, get this rejection off of what's the 1.618. When did we hit that? We just hit it yesterday, right there. And it just so happened to be the regression top as well. So we would do that again, except in a different position from the regression. So that would mean that we ride up, we resist once again from that 1.618 at 507, perfectly at 507, right? We use that to revert back and start validating our support, which is a new conversion. and then we would ride to the next targets. So there usually is a process to this. There usually is a strategy to this. This is called a breakout strategy, using a falling wedge. The falling wedge has 3 targets. This is your 1, 2, and 3 targets here for you to evaluate. Okay? Now, how it's played, I'm not going to go into those details because it's going to take too long. But which is why I'm just going to introduce you again. Join the ArcMastersCourse. By the way, if you already received your welcome packages, please wait in the Arca University. Wait patiently. I'm going to assign your roles. The channels are almost done for the track 5 students. Okay, you guys, so wait patiently there, and I'll go ahead and assign your roles hopefully tonight or tomorrow. Okay, but all the welcome packages they started rolling out last night. All right, you guys, so the seats may be taken, but I'll try to fit you in. So go ahead and get in touch with me here for that beginners charting and trading course. All right, you guys, so there you go. I'm thinking that this may give you that shot. Okay, remember, potential floor, sitting in the golden pocket of a fib retracement. Yesterday we touched perfectly on that 1.618507 rejection right off of that regression, right? So there is a potential for breaking out. Why? Because this triangle has a typical behavior. These triangles typically behave and break out at a certain point. We'll go over that in the course as well. All right, so now that you know these targets, does GME show anything in the immediate short term for a potential upside? Well, I wouldn't say that it does just yet, because we're smack in the middle of a range. I want you to look at 2 very important zones, actually. 3, I said 3 because this is your, I really do think the biggest demand is at $20. But if we're showing potential upside soon, then that means we may still have some consolidation to worry about within this range, right? It doesn't mean that we're going to go to the moon. It doesn't mean that we're going to go to hell. It doesn't mean any of that. It just means that price action is still finding its value. It's okay. Remember, price is only a future projection of what a company may or may not be worth in a time frame, in a specific time. So we're here to evaluate that potential. So if we are showing a continuation to the downside for support, then I would see us touching down again into this level here. In fact, the 2284 marks off a really interesting zone because you could use that as a double bottom for a continuation. So in all technicalities, yeah, there could actually be a reason for us to touch back down at that $22 level, technically, right? We don't even know another reason at all just yet. Technically speaking, sure. We can use that as a double bottom and then bounce to the upside and start resisting again from the targets that we've been using. Remember that this asset is still running $6.58 on average per day. So that means that any day that the asset is trading, this can go up or down $6.58. This is why we use statistics, right? So if we are using stats, this thing drops to around, let's say, $23. If we're running close to $7, then that puts you in the $30 range, right? Right in here. We already have the numbers figured for that average range. Now, if we do open at around that $24 or $23 level, I don't want to say that, right? But inversely, you want to gap down for an upside, and you want to gap up for the downside. So if we gap up and we open at around $25 or $26, then your $19 to $20 level becomes relevant, right? So we have the clean split. What I'm telling you right now is that we're at the 50% between 30 and 20. So if there is someone out there telling you that this is on Thursday gonna go to the moon, or it's gonna go to $2, they're full of shit. They don't know what they're talking about, and they don't know what the fuck they're doing in the markets. Because when you're sitting at an indecision, you're at an indecision. And we're gonna have to break out of that in order for us to determine where we're going next. right? You see it for yourself. All you have to do is draw a box and find out where you are in the split. And that's where your 50% usually sits. Oh, sorry, 30, right? We set up to $30. There's your 30, there's your 20, there's your 50% on the box. And look at price. We are smack in the middle. Remember, I'm trying to make sure that you guys are able to see a different perspective, a fresh approach every time we look at the chart. So I'm going to bring in something new every single time. So hold off, because we don't know if this is going to go up or down just yet. What we do know is that we have a potential for a double bottom at $23, $22.84. That's what we do know. Okay, so make sure not to panic, right? Make sure to mitigate or make sure to manage your risk properly, right? If we start noticing downside, we're going to start noticing when it starts breaking below 22.83. If we break below this level, let me bring up the next chart here. I think I might have it somewhere else. Okay, we'll just do it here. Yeah, if we start breaking below this area, then yes, we're gonna be noticing a big downside here. One more thing I want to show you. There is this gap here. Right now, if you look, we've already been supporting, right? All these here, all these candles, bam, at the gap, upside. Right here, we came down to the center of the gap, upside. Right? Oh, actually, I'm sorry, we filled it all the way, and then we went upside. We came back and we went upside. So we're doing that yet again. That's why I'm saying that there is a potential for a bounce around this area here, because we have done it historically. So for now, yes, I am telling you that it can go up or down, but remember, I will never leave you hanging and say that it can just go up or down. I will always give you my bias too, this is how I differ from a lot of traders, because I'll give you my bias. I'll tell you, well, I personally think it'll do this or that. Yes, we're at the 50%, right? There's an indecision presently, and we don't know if it's going to go up or down. We evaluated that we have a double bottom. We evaluated that we've bounced historically here several times to the upside from that gap, which only increase our probabilities towards getting a bounce again. So yes, my bias is still with the bulls in this case for the slightly larger term. So that means in the immediate short term, we may be expressing some pressures down into this area here, but that's typically what you would want to get the bounce to the upside. Strategically speaking, using candle analysis, this could be what's called a dead cat bounce. And there could be a bear trap to this bounce. So this is your drop, your impulsive upside, right? Your rounded top, and breaking below the 23.78 would then take you to the total target, right? We can go over how to measure a dead cat. That can bring you down to around, I would say, 21.82 to about 22.20. Around there is your target. But we still have this inflection point. So that means that you can get 50% or 50 to 60% to the target of your dead cat bounce towards the downside, and then the bulls trap the bears here. You use liquidity from the bears and you run it up because of this gap. So the short-term traders are looking at, the immediate short-term are looking at a bear play here that can give them awesome returns all the way down to, like I said, right, $21 maybe, even, I would say around $21. But then they're just going to get smacked out of the way at 50% that direction because they're not looking over here. All right, so strategically speaking, yes, there is a bear play in line, but there also is a very bullish area to bounce from. So my bias is leaning towards the bulls, and now that aligns up pretty well with what we were talking about on AMC. So if AMC is going to express a downside first, sure, we can drop down right back into that 482 to the not 382 of the golden pocket, and then get ourselves to bounce to the upside. Right? So it does line up pretty much okay. Now, even if price action came down to the bottom regression, that's also okay, right? Because if we put a line here and we start to observe, price action has bounced from relative areas, even here. It was actually the entire range that we're talking about. This bottom side here was 477, and it jumped all the way to that 507 of the 1.618. This was one entire range that we did. So yeah, there is that potential to do that. Now, if we do, that would be your resistance, and then you would get caught in support by that regression. Strategically speaking, guys, okay? There are people who trade by fundamentals only, but trust me when I say, there are millions and millions who trade based on formation theory and statistics. Many, many, many institutions do. Now, if that's the case, are we also building what's called a bullish buy formation breakout? That's something that I've coined. What would that be? Well, let me show you again a different perspective from what we talked about last night. So I'm very happy that we have these viewers here and right now, because you guys are going to benefit from this more than when we usually have these 700 to 1500 average viewers, right? You guys are the ones that are showing that interest. You guys are likely the ones that are going to benefit from the move. This is a right shoulder. This is a head. And this is a potential left shoulder and right shoulder. Sorry, left, head, and right shoulder. So we potentially have an inverse head and shoulders working its way here too. Now, what I will say is that this is your neckline right here. So if it is the neckline, we now have a potential measured move. How is that? Well, it's just like this, right? You measure that neck to the head, and then you put it on top of the right hand shoulder. Target's coming up to about 546. Now, 546 is really interesting because we have the 1.618, 547, and the 3.272. Guys, we talk about these all the time. We're confluent to geometrics again. Again, here's your line. Right into the 1.618. Here's your price objective. I'm giving you speculation. I'm giving you ideas. I'm giving you ways to observe the market in a different format, right? And it is a bit far away. I get it. So let's take a look at the stats. Let's bring up the daily average true range on this is around 70 cents, right? That means it can move up or down 70 cents on any day traded. So if I'm talking about breaking out of here in the next day or so, and then we come back to these lows here, I'm really talking about coming back to around 494, right ish. So if we did a 494 to a 550, where's that landing you? 490 to 550, right? That's already 60 cents. And we're looking at what? 68.3 in average true range. So mathematically speaking, it's viable. First day, we get the break. Not everyone's going to be trading tomorrow. And not everyone's going to be trading on Friday. We're going to have lower volume. Okay? But the moves here that I'm giving you are well within the bounds of math. So this is why I'm giving you the targets to the upside. Okay, you guys? We have shorter term resistances because they are very, very likely going to pressure price action back down. Any of these areas will. But the one target that I'm looking for on this move would be right up here. Right in this area here. So let's make sure to make that large, just like this, and get our lives to move on, right? Now you got the receipts. So make sure to take your screenshots, right? Just in case you need to get a different perspective, right? Remember, this is not the only play out there, guys. And I may be wrong as all fuck. But what I can do is observe the charts, and I can give you the interpretation of the glyphs, right? And move on. So this is what I'm observing. That's what I've been looking at We're out of catalysts that can bring this thing to the downside, at least on the GME side. And we're looking positive in the broader markets. Whoa. Team, let me know that I am still streaming here. Yeah, just got a little bit of a cut in power here. Throw the A's in the chat if you can still hear me speak. Damn, dude, this is like... Okay, good. This is a random... Bro, I don't know what's... Like, there's all this crap happening to the system. All right, good. Good, guys. Thank you so much. I appreciate that. By the way, guys, we still have about... it looks like there's around 250 people watching right now. Make sure to hit that like button. Let's get that thing to 100 so that YouTube can observe, the algorithms can observe that we're knocking out that 100 mark every single stream, every single video. Please do me a favor and absolutely violate that like button, right? Let's get it up there to pass 100 and everything will be good. Really appreciate everybody for coming on by. What I was saying is just that if we're going to observe continuation, the SPY just made another all-time high, getting itself so close to that $550 mark, which is something that we were already kind of looking at. So Nina is asking me what's my take on the FTDs and the quad witching coming up. Remember that I did release a video already on the quad witch. I had already given those notes out because I'm way ahead, right? I want to make sure that you guys are observing the potentials of that data as I'm thinking of it. Right, so let me see if I had the, I wasn't planning on talking about that today, right? But it's okay. Let me see if I have that analysis somewhere in here. I think I do. I think I do. Now, while I do that, guys, make sure to hit those links on the bottom right and left to join the Arca Bulls trading team. We're trading the markets together every day, guys. Let's see. I don't have that there. Okay. Actually, this was the chart that I was looking for earlier. Not there either. Okay. Yeah, you guys, I don't have the... Oh, could this be it? Yeah, here it is. Here it is. All right, good. Damn. You saved... Oh, man. Dude, good job. Good job. Okay, actually, you know what? This is the weekly sentiment. Let me see. Yeah, so this is the week, I guess, of quad witching historically. I back tested that. There is usually a bearish outlook for the third week of June historically, but barely. It's a minus 0.28% as the average weekly return. This is studying 5 years of price action. Now, studying 5 years of price action means that I am studying intraday only. So I am studying the open, high, low, close values and not the post or pre-market values. Why am I doing that? Is because I wanted to maintain all outliers out of the way. Because a lot of the price action ran many, many hundreds of percent inside of the post and pre-market sessions. And that's not going to give me a true read because in statistics, you remove the outliers, you omit them. So I needed to make sure to get a raw outlook. And I'm not looking for the huge targets. I'm looking for just the bare bone target to identify if the day is bullish or if the week is bullish or bearish. So typically speaking, third week of June is bearish by this much, right? It's bearish. It's barely bearish. Now, the average returns on any given Monday, Tuesday, Wednesday, Thursday, or Friday are these here. Thursdays are typically bullish. We typically return 3.81% on average. And I'm talking about every single Thursday back-tested 5 years. And Fridays are a little more bullish, leading towards a 3.90%. Okay, so leading towards those statistics, yeah, there is a possibility that we can start reverting towards the upside based on not only the fact that we had the 5-day closure around 2 days ago, I believe, or 1 day ago. So that would mean price action towards the upside. We did get it though, but to revert now that we don't have the catalyst is what I mean. And we're also close to a double bottom on AMC. We're close to the $22.84 on GME, which would mark off a pretty bullish area. Right? So, yeah, the statistics are proving historically that we have 2 green days coming up. It doesn't mean that it's going to happen. I'm just telling you that this is, that means that it's just on, statistically speaking, we're facing green days. Because you guys know that I'm a data trader. I'm a systematic trader, right? And this is how I usually observe price action based on numbers. So, Nina, what'd you say? Yeah, yeah. In other words, this is your usual return. There's no. The thing is that everybody always says this, right? Everybody always says that quad witching doesn't do shit to price, but that to me is not an answer, right? And doesn't do shit or price action doesn't react is not an answer to me. So because there are a lot of people asking that, and because there are a lot of people answering in that manner, I'm going to put down the data and I'm going to give you the numbers as a physical return, as literally a statistic. So this is why I did all that analysis, right? So that you can benefit from understanding what usually happens. And I think I did it for AMC too. Let me see if I have that around here. Because, yeah, I do believe I did it for this boy as well. Here it is. Okay. 3rd week of June. You're not going to believe that, but it's usually bullish by 31.84%. Which is just ridiculous. So, on average, right on average, there tends to be a 31% return on this week. Historically, 5 years back tested. Right? So, Arca, I'm going to send you, Nina is saying, Arca, I'm going to send you this dude's YouTube. His name, he's insane with the nitty gritty on finding FTD history. He's so accurate. Okay. So, yeah, no, go ahead. That's fine. I usually don't study FTDs, because I'm more of a short-term trader. I like to find catalyst or whatever that happens more for the immediate short term, as I like my gains to return literally within 5 minutes, right? So while I hold a bag, sure, I'll hold it, right, from a low, but it won't be a huge position. I'm doing it with you guys to, just to provide transparency, to be part of the team, whatever, you know what I mean? But I'm gonna hold a small position there that's just gonna be held there. And then with other gains that I get from AMC and GME, sure, I'll add to that at appropriate prices. Okay, so, but yeah, I don't usually study FTDs and stuff like that. I usually study more of day-to-day moves. I want to know what price action does during a single day, during a week, and this is why I bring you that analysis so that you can benefit from it, right? So yeah, those are your stats right here, right? So if it is showing a 31.84% upside, it depends on where we open, right? But if we're at 484 right now, and we get that 31%, let's just say from that 484, then it would take us to a target of, let me just see, are we at 4? Yeah. Then it would take us to a target of around $6.34, confluent to the 2.272. So if it's 634 or 632, please remember that we have other resistances that can prevent price action from getting there. In other words, the 1.618 pivotal point right here as well, Confluence at 595, 592. So if our range is 595 to around that 634, 595 to 634, then what was our analysis earlier? 595, I'm sorry, to 6, what was it again? What did I just say? Shit. I got you. It's meeting the statistics here. Here we go. 595 to 634. Yeah, we have upward bounds in here that are leading towards this right here, 551. I'm looking at a 547. So 547, if I adjust that in the previous chart, let's adjust it. 547. Here you go. I'm gonna change this. Let's go to 547. Here we go. And we're gonna do the 634. Here we go. And your 50% lands you at the 1.618. In fact, it lands you at 590. So coming back to the strategy, 590, yeah, it's still within viable reason. But again, remember, you have price action below that can stop you from getting there. For example, the take profit targets from this formation in a shorter time frame. Remember, shorter time frames cascade into larger ones. So statistically speaking and psychologically speaking, the numbers do match up. So that means that we have a range to look out for. That means that we have literally anywhere between this zone here as a potential floor of 477, and we have now a potential ceiling up to around that 590 to 595. So that could be the new zone for us to kind of chill on. 2.618, 598. 2.272, 580. Geometrically confluent as well. Okay, you guys, and now if you look left, look at this pivot here. That's your 590. Right here. And we were just talking about a 590. So mathematics are also showing that we could be reaching pivots. Right? So I just want to show you how Confluence works, because we look for rhyming targets. That's what we look for. We look for psychological breaks, psychological formations with price objectives, statistics that rhyme with those, and then we combine all the strategies to identify your higher probability tops so that we could trade that range. So if let's just say, for example, I'm in at 477, then I'm probably going to be out at around 507 on a bigger move. Swing, maybe one day. Right? Then I would pull out, let price action settle to that 497, 495, whatever that is, get long again, then start the upside and start taking profits at 512, 518, 524, maybe even up to 536. Because statistically speaking, we're moving 68 cents per day. Right? So then I would remove all profit here, let it consolidate. You come back down to validate this area here, the 518. I long again, and I take it to the price, I take it to the top, to 560, to maybe even around 566. We're scaling out at 547, 553, 560, and then ultimately you scale out entirely at 566. Then you let it pull back again. And this time you're validating these tops here. 535 to 540. Then you long it again, right? And in this whole process, you're bringing in multiple percentage. And from there, I can add to my long-term bag, right? So I'll just go ahead and add bits and bits from all the green that I'll get from this, right? So it's just giving you guys ideas that you don't have to moon bag the whole time. You can add to that bag, right? And you can maintain yourself delta positive by trading the interim. And I'm telling you this only within this asset, which I don't like trading. In reality, I like to trade bigger stocks, right? I like to trade other things because they're safer. Because there isn't a huge, there isn't a huge bear lurking around your back all day, every day. When I first started trading, I lost all my money to AMC, so I'm not a fan of it, or Adam Aaron. So I just want you guys to know, I'm being completely honest here with you. I'll show you the upsides, I'll show you the downsides, I'll show you my strategies and how to trade it, but it really doesn't mean that I'm going to do it all the time, because I'm not a fan of it, guys. I fucking hate them. So whatever. But they did also losing all that fucking money with AMC when I first started, that led me into becoming the person that I am today. So I do have like this love. It's a love-hate. The only thing nobody ever knows is why price hypes over no reason. That's what Richard Newton dug up. Okay. No. Richard Newton is a fundamental trader. He is a fundamental trader by nature. Hold on. I have, oh, jeez. Guys, we were able to identify the potential upside before it happened. We noticed it from $11. On April 14th, the Arca Bulls team looked at price action on GME because CoinFox, one of our analysts, said, "Hey, dude, take a look at GME." And I'm like, GME? I'm like, bro, if I release a video on that, I'm gonna get fucking shunned. So he said, dude, just look at it. And I look at it and I'm like, okay, well, let me just see what it's like in volatility versus momentum. So I'll just go ahead and repeat it for you as if I was doing it brand new. Remember, there's a difference between the types of traders that are fundamentally based only and traders that are using charts. Because charts, historical volatility, momentum, using a bit of physics, we can understand behavioral anomalies. We can see that. We can see potential zones that can allow price action to exponentially grow. Now, how did we identify that in the first place? Well, remember what I've told you before, right? About using the volatility and momentum, the desert, right, where you're in a very where the mud is completely wet, right? It's just wet mud. Of course, it's not going to be dry mud, right? But yes, it's wet on the floor, but it's completely leveled perfectly. No interruptions, ripples, or anything on the floor. You're in a desert. You're in the center of it, and nothing but perfectly leveled mud. Well, if you take a step from point A and you take a step to point B in this, let's just say, in this entire barren land here, right? You're in the center here, and you take a step, you're leaving a footprint. And if you take another step, right? Let's just go ahead and take it here. If you take another step, you're leaving another footprint. And you take another step and another footprint. And another, and another, and another, and another until you're out. What that does for me, for the Arca Bulls team, is that we're able to track those steps because you were there. Who? Us and the institutions, regardless of lit or dark pool trading, because we're able to trace those moves based on volatility. If they trade in the after hours or in between hours, huge blocks, those blocks are going to shift volatility at the open of the next day or next pre-market session. So that shift in volatility is going to be a spike. We can see those spikes, and that's what I track. And that's what I teach in the master's course. So if I'm able to do that, I have a pattern. And even if it's algorithmic, it doesn't matter. That means that I have a footprint. And that means that I have a course of direction and a certain behavior and a pattern of behavior. So that's how I'm able to track this. So anyway, let's get rid of all this crap and now see how we were able to determine how price action was not random. It did not happen based off nothing. No. I will deny that right now publicly in front of you that it did not happen without any reason. There was a reason. So if anybody's telling you out there that there was literally no reason, they just haven't done all the research on areas that they're not experienced by, okay? But I'll show you how. All right, here we go. Let's pull up volatility and linear. And let's pull up stochastic momentum. Okay. I believe it was in the by daily time frame, if I recall correctly. And it was GME. Okay. The distance. Okay, first of all, in order for you to understand volatility, I got to tell you this. Volatility is direction neutral, right? Expansion just means that there is a higher frequency of transactions. People are longing and shorting, just more activity is happening as we expand. When we contract, that means that there is less activity, lesser transactions, right? The duration of a critical read, meaning inside of critical contraction, which could be within 15%, critical expansion could be above 90%. The duration inside of these areas matter. In this case, we noticed a contraction phase consistent of about 55 days long inside contraction, inside of the 15%. Now, if we look back, there have only been a few iterations that have been that big. This is not one. This one here is one, right? Okay. Now we're seeing two that were very large. But now look back. Look back. Historically speaking, here's our line. We see another one back here, right? That was very similar too. Okay, now we look back and back and back. And we see another one over here too. So we bring back this thing over here. And we're still bigger than that one even still. And we look further back, and there are no others that they were bigger. So that means that we were within the top 3 contraction phases, the largest contraction phases that GME, has ever experienced before. That gives us a digital signature of volatility footprint. Now we know that this is the largest time amongst the top 3 signs of contraction that we faced historically on the bi-daily chart throughout its entire trading history. Now, if we look at some of those times, what did price action do? Right? Right over here, we're going to mark it off just so that we know. This is your back test then. You start to see, okay, so what did we do in those iterations? So we mark them off, right? Your big areas of contraction, we want to know what price action did. Did it stay still? Did it burst to the upside? What happened? Right? What did it do? So let's just take a look, right? Well, all we do is see. We just want to see if there was anything there. And this is the other large one right in here. Okay. Jeez, are you serious, bro? Like, mouse is not going to react? Here we go. There. Let's start off with this iteration here. Let's go ahead and now identify that, yeah, that was one of the bigger contraction phases. So let's zoom into it. Well, what do you know? On that contraction phase, price action led. Look at this. There it is. The contraction, right? That's all the blue. Huge blue. Massive blues in here. Right? Price action ended up dropping to $4.80 before it reached all the way to $7.16. Massive upside based on that contraction phase. We're talking about a 50% move to the upside based on just one random iteration. There might not have even been a catalyst at all. Positive earnings, that looks good. But that was on this day. And then we continued for 2, 4, 6, 8, 10, 12, what? By daily candles, guys. These are all by daily candles. Okay, so let's continue. Let's look at another iteration. They don't all have to agree towards an upside. Here's another one. This one right here. Here's your contraction. Price action on that contraction phase dropped to this low, $5.05. During this phase, we jumped to 560. So there was an upside signature. But when it expanded, we dropped. But And I mean, we dropped hard. So now we know that out of contraction, we have a hard move down and a hard move up. Okay, let's continue. Let's go again. What about this section here? Okay, so price action bottomed out at about 23 bucks and ran to $35. So we have now another upside phase within this contraction area. And then when it started expanding, large move to the downside. So now we know that, yeah, these contraction phases bring in high volatility. But it matters where in the price action you are to determine if your price is going to go up or down. It matters where stochastic momentum is telling you that price action may go to. We were peaked up here, and then we faced a downside, and we got a downside. Right? Okay. So now coming back to the contraction phase where we were here. So we're looking at this and we're like, holy shit, we're in a big area of contraction again. What's happening? We're at the top side of stochastic momentum, right? So we're right in the middle of this and we're thinking to ourselves, holy shit, we're going to face a downside here. What is the low? Because this is a huge explosive move. If we've seen before that we've gotten upside followed by huge downside, that means that in this case, we're already at the top and we may get a decline before this thing explodes to the upside. So then we started back testing the more critical timeframes. We went up to a 3-day back test, a 4-day, 5-day back test, and an 8-hour and a 12-hour. So that gave us the answers. Then the video came out. Hold on. I'm going to bring you to it. Let's take a look. I'm gonna have you take a look at this, all right? Let's go to 50. And this was happening live, guys, by the way. It was happening live. Like this was on a live stream just like we are right now. So then after we did the back test live, right? This was April 14th. Data came out around April 20th, April 25th that we would be experiencing that from April 14th we set $11 to $9.50. $9.50, we set $9.50 to $22. And we would see then what the hell would happen. And then I told the team, guys, we need to be super fucking careful with what happens here because I can't just say that this is going to run fucking 150% to the upside or else I'm going to get murdered. Because there's a huge community behind GME and AMC, and that likely means AMC is going to run too. Let me bring you to this screen. Right here. I put GME, more upside, and I put a phase reveal, and I just started saying that this thing is about to run big. This was on May 5th. And then on May 6th, I released $20 inbound GME with statistical analysis. Inside of this, I exposed all of the targets that I had brought out. $20, it was anywhere between $18 to $22, $25 with further upside standard deviations. So all of this was based around the footprint model. Because this is not the only thing that I consider. I consider DMI. I consider so many other factors for this. But this is to display to you that the upside that GME faced was not random. I declined that, and I officially challenge any fucking body that's out there, any influencer, to fucking say otherwise. Fuck them and fuck you. I fucking have the data and I proved it right. With statistics, I fucking proved it. And I can arguably be the first motherfucker to talk about this upside from any of the influencers at the floor. I even called the bottom of it. So that is how we do it, guys. Now, let's see. The name, it's actually, you can use the Caretaker's original indicator. It's called BBWP. Bollinger Bands with percentile, linear volatility. The one that I'm using here is inspired by him. I created this one because I wanted to have, what I wanted to do is that I wanted to have a heat map, right? I wanted to have a volatility heat map in the background so that I can be able to benefit from intensity, right? Transactions increasing in volatility, decreasing in volatility. So I added that. It's stylized differently too, but you have a similar indicator already out there, and it's called BBWP from the Caretaker. So make sure to get that one, man. Use it. This one is going to be available to the Arca Bulls trading team, I think this week. I'm about to release it to everyone. And I'm going to release it inside of the Arca Bulls trading team as an open source. So they're going to be able to use it, mangle it, whatever, however they want. But you do need to join the team in order for you to get access to that script. Because I'll give you the raw code, and I'll also tell you and instruct you on how to put it. I have video instructionals for that too. More educational content is coming out, and I'm uploading it into the trading team as well. All right. So now, are we in a contraction phase? No. We're still in a massive expansion phase. We're still everybody's so excited right now. You know, this chart doesn't speak downside to me. The chart really speaks temporary consolidation before whatever happens. We're going to determine that. I want you to identify where we are, though. Short-term high, short-term low. We're very close to the 50%. We're deviating around the 50%. Look at the prior candle here on the buy daily. Perfectly in the middle, right? We're deviating up and down that 50%. So this is why I'm giving you targets towards the upside and towards the downside every single day, is because we're deviating. So you want to know with me what that probability could be. So that's how I'm helping you. Right, you guys? Okay. So we got that out of the way. I love it. Oh, Jay, thank you so much, man. Really appreciate you guys. I just wanted to be clear with you guys, man. I wanted to show you that, yes, it doesn't, guys, there are influencers that have a larger presence than me. Sure. That doesn't mean anything. It doesn't mean anything. Only because somebody has more subscribers than I do. Man, how long have they been around? You want to see how long I've been around? Check this out. I'll show you something interesting. Let's go to the Arca Bulls channel and show you something that not a lot of people know. So we're going to filter this from latest to the oldest video. And here's your boy. Arca Bulls has existed in YouTube for 1 year. And we're about to break 11,000 subscribers in that year. So whatever that is, I don't know, man. But there definitely has been a lot of work to it. Because as you can see here, we've already, here we are at 10.9K subs. We're just about to break into 1.2 million views. And this is what it took to get there. 1,367 videos of analysis in order for us to pull that year off. That's your dedication and that's your commitment. And that's where I am for you. So that's where we're at, guys. It doesn't mean anything. I'm just saying that I have a different strategy. And I have a different way for you to observe the markets, and hopefully one that you can be inspired by using. Right? So I love you guys. Thank you so much. K-Spec saying nobody sounds better than you. Nobody sounds better than you do. I love you, man. I love you. Thank you. Future, thank you so much. Really appreciate you guys. Guys, I released a few videos on that live stream where we were speaking of the $9. We were sitting at $11.40, $11.50. And right there, I'm like, guys, something big is about to happen. And nobody know. And then, guys, I have to tell you this. There have been so many people to accuse me of being in the inside. So many people to accuse me that I am the short seller. So many people to accuse me of left and right, up and down fucking left. I mean, I'm not talking about in any diagonal fucking way that you can think of. People have literally jabbed me and stabbed me and whatever, ran me through the ground, threw the fucking rocks at me because I am honest about the direction of an asset. I don't care whether the upside or downside is going to happen. I care that you know. So if it's going to go to up, I'm going to tell you the up. If it's going to go to the downside, then I'm going to tell you the downside. I'm not one to tell you that it's going to go up when that shit is showing pressures towards the downside. You got the wrong person if you're here. I am never going to do that. And I will be explicitly clear to you right now that I will be a bear when the bear shows up, and I will be a bull when the bull shows up, because we're ambidextrous traders inside of the Arca Bulls trading team. And this is how I'm going to forever be. I will never hide the truth, and I will give you the exact feelings that I have, and that's it. So whether you like the upside or downside thesis that I'm giving you, I don't give one shit about it as long as I'm being transparent and honest. And that's all I'm going to be. And that's my promise to you. And I have been. From the very beginning, I didn't even mean to be a fucking influencer, to tell you the truth. I never meant to be this. All I did was express my mathematical thesis in Twitter 2 years ago or 3 years ago, whatever that was. And I just wanted somebody to revise it or to get a peer review from another colleague, from someone else. And that didn't happen because I was looking forward in price in other assets. I was covering tickers that a lot of people were looking at, and I was like, oh, well, let me try that. So then I would put my mathematical analyses behind those tickers. And then I would put out the price action and the targets, not knowing that people were going to benefit from that. So I did it over and over and over again, and then people started noticing. I didn't get any peer review. What I ended up getting was kind of like the dude at like the Americana or the Grove here in LA, right where the theaters are and all the mall is, and everybody joins up and eats food and has a good time. You got that guy in the side in the fucking alley playing his drums on buckets, and you have the people surrounding him. That's what happened. I just became this like attraction. I never meant to be this fucking influencer. I never meant to be this. I never had the plan to do this. I just wanted to trade. All I wanted to do was to make sure my fucking son survived because he was gonna fucking die. That's all I wanted. All I wanted was to trade. And then I noticed so many people lost money in AMC like me. I didn't know that. So many people lost money in GME like me. I didn't know that. So I started helping people that were losing their asses on those trades. So in hopes that they can see a different way of measuring the markets, because as soon as I found out that Ken Griffin told me in an interview, I was watching it on YouTube, but it felt like he told me directly to my face. He said, you think you're going to go, I think it was him actually, and I can't find it. But he said it in an interview. He said, you think you can go up to, come up in the Staples Center and play a game against Kobe Bryant and expect to win, let alone score? He said, this is my game. This is my court. So when he said game, when he said court, it was fucking over. From that moment, I knew that there was a rules base and there was a solve to a puzzle, and I was gonna fucking do it. And I was gonna, I'm not, guys, I'm gonna tell you right now with complete humility that I'm not anywhere near the best trader in the world. I'm not. There are guys out there that have real talent, fucking unbelievable talent. I'm not gonna praise that. I'm never gonna tell you that I'm the best, but I will be honest with you. When I first found out that it was a game, in that moment, I said to myself that I'm going to be the best trader anybody has ever fucking seen. And I'm going to make sure my son survives. Because that was the fire under me, because I didn't want him to die. Okay, so I figured that if I had money, I would do something like in that Grey's Anatomy episode, or I think it was Grey's Anatomy, or maybe Bones. I forgot which one it was, but this really influential person, important in I don't know, military or something, came up and magically donated $5 million to the hospital where his daughter was in critical condition in. That's what came across my head. Can you believe it? A fucking show. Because he donated and then magically his daughter was fine the next day. So that's what came across my head. That maybe if I had enough money, then I can just magically donate to any hospital so that my son can survive. I never did this for Lambo. I never did this for fucking big house. I never did it for a fucking car. I never did it for shit other than for my son. So that's my story, guys. I didn't mean to be this influencer. I didn't mean to be anything other than just a provider for my family. That's all. And I'm fucking doing it. So we're here good, and I'm going to give you the information, and that's why I'm honest with you. Because there's an actual reason for me to be honest with you. So yes, I'm a dick. Yes, I'm an asshole. Yes, I call people names. But I don't give a fuck, man. Because I'm doing my thing here, and I want to make sure that whoever wants to follow, if you want to be part of that bandwagon, then fucking join me and let's go. But if you don't want to be, it's okay. I get it. I understand. But that's the story that I've given in so many fucking... I've been a speaker in so many different things, guys. That's what I tell everyone. So I'm not going to give you any more reason for you to believe me. You don't have to. But I'm not just some dude looking for a Lambo. I'm not. I don't give a shit about that money. I really just want my kids to have a roof. That's all. That's all I want. Stability. I'm not looking for millions. I'm not looking for anything else. I'm looking for consistency. And it's a fucking amazing experience having it here with you guys. I gotta say, man. I gotta say, it's been amazing with the team. I've made friends that I never thought I'd make. Lifers. I've made lifelong friends. So guys, I appreciate everybody for coming on by. Make sure to hit that like button, right? Subscribe to the channel. Guys, get the Arca Bulls team to 11,000 subscribers today. We are so close. We're about to make that 11K mark in literally just a few. Take it there, guys. Do me the favor. Make sure to hit that thing right now. Subscribe to the channel and get this thing to above 11K. Which, by the way, I think we were in 10,000 subscribers for maybe, like 7 days? I've never experienced growth like this in my life, guys. Thank you. I really do owe it all to you guys, man. So this is why I'm here. This is why I'm busting my ass. This is why I want to make sure that you guys are able to observe these plays. It's just like that, guys. I'm trying to be as honest as I can be with you, man. Right? Fuck the capital gain. Fuck the Lambo. I just want my family to be good, and you are my family as well. And that's why I'm doing it, man, because I'm more about that than I am about the big ass bag. I'm about the family being okay. So if you have those morals, and if you have those values under your veins, join the Arca Bulls team. Come by, because we leave no man behind. Fuck yeah, man. That's right. Dude. Nina, I appreciate you so much. Alwyn, you're very welcome, bro. You're very welcome. No problem. Gray Man saying deadly accurate. That's right, man. The friends are. That's right, man. Ignite that fucking algorithm. Smash that like. Get us to above 11K. We're about to do it again, team. Thank you, Mark. I appreciate you, brother. Guys, all that shit that I just said is to inspire you. It's my honest truth. I don't know what to tell you. There's nothing else. That's who I am. Guys, I wanted to give you an interesting thesis on NVIDIA, because if this thing is really going to go to these targets, I don't know. But check this out. If we go, I think it's actually the bi-weekly. Yeah, the bi-weekly. We already reached some of the targets that we were already. I was thinking that we were going to reach around $120 anywhere within a measured move, right? This huge bull flag. Guys, we're at the point when you're talking 136. We're at the point that the why not thesis applies. There is a why not thesis, believe it or not. I think NVIDIA may actually hit 150 and beyond. So just heads up on that, right? I think NVIDIA is going to do that. The SPY actually just reached a new all-time high at 549. This is amazing, right? So these are short-term opportunities that we can be trading within the team. Guys, this is what we do, right? Yeah, we're observing GME and AMC. Sure, we're not going to let that go. But what we're also doing is playing the play with the others, right? And that's just because there are short-term opportunities that we can literally get hundreds of percent And we do. And then, we have more capital, right? We have more liquidity. So we have a little bit of a deeper pocket and we'll go enter something else, right? So SPY making a huge upside here, right? Very nice. Guys, I see that thing squeezing, man. Thank you guys so much for participating. Thank you so much for engaging with the channel. I absolutely love you guys, each and every one of you, man. Thank you. I appreciate you so much, guys. Yeah, and guys, if you remember what I told you, I still mean that shit. What I meant is that if you if you get yourself into the master's course, that shit is not going to be an easy ride, man. It's not going to be an easy ride, but I will tell you, it's going to be a consistent one, and it's going to be a really enlightening one. So you're probably going to get into fights with me. You're probably not going to like me, and I'm going to start you off as a fucking bear. You're going to understand the short thesis first. You're going to know how to play the downside first. Because, believe it or not, all of us that are playing long never really realized that there was a reverse on the stick shift for your car. Like, we're driving forward only. It's like, oh, wait, whoa. Like, dude, this shifter has like a R on it, and that's like for reverse, bro. What does that do? Oh, shit, I can go backwards too? Damn. Right? Yeah, I'm going to show you how to reverse. I'm going to show you how to parallel park, right? Because we need to do that in order for us to drive accurately, right? To drive correctly. And yes, on a game like basketball, baseball, right? On a game like football, soccer, there is an offensive side and a defensive side. We can't go only offense. Right? We need to teach you the defense too, right? So guys, it's just the way it is. Love you, Mark Roach. So that's why I'm saying, guys, that you're coming in with huge aspirations. I'm going to crush them. And I'm going to tell you, you suck until you don't. Right? Oh my goodness, dude. Love you guys so much, man. All right, you guys. So I think I'm going to go ahead and cut the stream off here. And remember, for those of you who are joining the Arca Bulls Trading Team, the after party is usually right after the streams. Like always, make sure to hit that like button on your way out, guys. Make sure to subscribe on that way out. And I will catch you on the next stream, right? We're going to do another market prep tonight, but that's going to be in private, guys. I love you so much for coming on out. I love you for participating. And I love the donations, guys. Thank you so much. All right, team. Any questions, you hit me up, all right? Peace, peace, peace. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Ever, 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 ever. I need you to do your own due diligence, and everything will be cool. And with that said, I wish you well. A very good rest of your day, and I will catch you at the Bell Mañana. Adios! Fuck yeah!